Hey folks, Dan Frio here with your Veterans Day special on November 11th, 2024. So here's rates, here's what they're doing. But first off, I want to just say special thanks to my favorite veteran is my father. And we lost my father a few years ago, but back in, you can see right there here, May of 2018, he was named Veteran of the Year. He served in World War II for us, and here's just a quote that he gave in. So uh, but sorry about that. So that's from my father. So thanks, Dad, and thanks to all your veterans out there, because a lot of people don't understand that you guys, I mean, none of this would be possible. So thank you so much for doing what you did. So now on to what we do every day. We talk about these things right over here. So what news do we have coming out this week? Well, it's pretty simple on the newsy equation here. We have inflation numbers. And the Federal Reserve is basically saying, okay, we tackled inflation. Okay, now we're worried about jobs. But there is inflation numbers coming in this week. So we have on Wednesday, we have the CPI. And then on Thursday, we have the PPI. So what are those? Well, just think of this. C in this part, the CPI, think of the C as consumer. So it's going to be consumer inflation. Okay. The P, think of it as producers. They produce the stuff that us consumers buy. So the PPI is producer inflation. So we're hoping to see it moderate, come down a little bit on the consumer side as well as the producer side, because we think if the producers reduce their price or get their prices reduced, they're pass it on to us. So that's the thought process on all this. Right now, we're seeing right through here, the bond market was closed for today. You can see that right through here in observance of Veterans Day, but the equity markets were open. So let's go over and see what the equity markets are doing right now. The Dow and everything just continues on its tear. Look, the Dow Jones is up another 300, S&P up 5, NASDAQ up 11. There's no red up there anywhere. The VIX is still at 14, under 15, so it means the markets are pretty much chilled right now. Cryptocurrency is going crazy. My son just texted me and said, Dad, everything is going nuts. And so let's check. Cryptocurrency is $87,000. That's nuts. They predicted 100, and I'm like, they're crazy. I'm going to show you at the end of this video. What we're going to talk about is I do Stock Talk Tuesdays with Dan. We talk about investments because so many people are like, Dan, we're broke. We can't afford a house. There's no way we can buy a home. So what can we do? So the first thing is we should talk about budgets. And I'm working on getting somebody, a special host, to come on and help us with budgets. But we talk about stocks, cryptocurrencies, how to invest. So check out Stock Talk Tuesdays. But I'm going to, at the end of this video, again, it's a special video today, I'm going to show you where our stocks, what we bought in our stock positions. And I'm going to show you when we bought them and where they are today, just to see where, where we maybe have tracked ourselves over the last 60 days or so. So we're going to go over that in the latter part of this video. But with the rest of this, let's get over to here. The Dow Jones just topped 44,000. S&P just crossed 6,000. Tesla's on a roll. Bitcoin's on a roll. And everything is going well. But why are you watching? Well, you're trying to figure out, okay, Dan, thanks for educating us on the equities and things like that. But what's going on with real estate? That's what we do for a living. That's what I do for a living. I'm actually a mortgage loan officer. So if you're in the market to buy that first home, maybe that first investment property, refinance, anything of that sort, I'll give you all my information at the end of this video. Love to hear from you and be able to help out. I'm licensed in all 50 states as well as Puerto Rico. So let's get over to it. So now, what's going to go on with interest rates? Okay, we're going to talk about house prices here in a second, but what's going to go on with interest rates? Well, the Federal Reserve already cut rates twice. They were expected to cut rates about 10 times. That's kind of coming off the table a little bit. But we know rates are coming down. Okay, I'm going to show you one piece of the puzzle. Well, let's just get over to it right now. Here's what the Federal Reserve is contending with right now. Okay, so you have to look at things. Is inflation out of whack still? Well, let's look at the inflation rate. It's right there here, the PCE. It went from, we were at 9 something, we're down to 2.1. They wanted it 2. Okay, we're right there. The unemployment rate, they were saying, well, we're probably going to have some pain there. We're probably going to hit 4.4, 4.5, 4, maybe even 5% on the unemployment side of the equation. What you're seeing over here, the unemployment rate actually keeps ticking down, and we are now at 4.1, which is basically at historic levels of where we should be. And then right over my head, you're going to see the GDP. That's how much production we're getting out of the economy right now. And if you look at it here, I'll get my head out. Second, let's do this. Let me move myself for a second. Look at it. So the GDP where we're at right now, if you look at it through here, we're basically in line to where where normal markets look like. So everything there is. Let's just look at this and say, man, this is kind of a Goldilocks scenario that we're facing right now. So that is that scenario. So now let's get to the housing market. So here's the thing that's throwing everybody on their ear. Remember, we kept hearing about a housing crash, and that housing crash. Well, let's just go back. Let's go back as far as this thing will go. This is telling us what home prices are, and what this is basically the median sales price of homes. And you can make whatever comment you want down below, but you have to just use some of these charts and some of the numbers for these purposes. But you might say, well, there's more bigger homes selling and so forth. But we have to use this data to. Well, let's just get. So here's what home prices have done basically since the 1960s. 1965, great year. That was the year I was born. So you had house prices, they continue to go up, and that's the norm. Every once in a while you have a little hiccup, okay, and then you go up, up, and then we had this real nice appreciation through here. And then you had here's the worst housing crash basically ever in history. So it dropped, and then from there it is just up and away. So that's what we're seeing here. So now let me just scan you back into 5 years. Here's what we've seen in the last 5 years. Okay, a lot of people are saying back in 2021 and 2020, the housing market can't last. Okay, it's going to crash. It's going to crash worse than 2008, maybe the worst than the Great Depression. Well, here's where we've seen it basically since everybody's saying it's going to crash. So let's go 2021. Let's go 2022. Whatever year you want to pick. Where's the crash? Okay, so that's what I'm not going to get into the housing bubbles, the crash, and all the other stuff. What I want you to do is do your own due diligence. Find out what your market's doing. One of the things that we do on a national basis, we go to Zillow. We use a lot of data there. They have a data center. If you go to Zillow.com, and then you go to the research section, and then data, you'll get things that look like this, tools, all kind of different things. Tells you days on market, the inventory, and all that other stuff. Tells you what's going on all through the country. Look, San Jose is up 7% this year. You go down through here, Austin's down, I think it's 5%. Well, what's your area doing? That's the main thing you want to be concerned with. So we like using Mike over at Altos Research. Just go to altosresearch.com and go right up to here, products. Click it, hit market report. The cool thing about this is you're going to scroll right down here and say run report. Just put in your zip code, whatever zip code you want right in there. It's going to give you a customized report exactly on what you're looking at. I don't get paid for this. We use this service for when we're helping our buyers. So why not, you guys use it for the public basis. So we have Mike on here pretty much every quarter to explain how this works and gives us a market forecast. So I hope you join us the next time we have Mike on our channel. Next thing is, let's get to the last but not least. How's our portfolio doing? Okay, let's get over to it. So here's a fictitious portfolio we created, and I'll show you the dates. Let me see if I can condense summary. So here's what happened. Getting comments from people saying, Dan, we have no money. We have just needing help understanding the market. So if I say, hey, the Dow Jones was up 50 points today, what does it mean to you? If it doesn't mean really much anything, you're the perfect person for this. Okay. So we're trying to create a fictitious portfolio with, even if you have 25, 50 bucks a paycheck, you can put into something. Put it in your budget though, and make sure you put in this. What I want you to do is research on different investment things. So here's what we've created this portfolio, and tomorrow we're going to go over it, and we'll go over this in detail. But at the bottom of this video, let me know if there's any stocks or ETFs or anything you want to talk about specifically. But let's get to this portfolio we created. It's kind of cool. So we created this, and it says VUG. Well, what is VUG? Well, you can click this, and it'll tell you everything about VUG. It's basically a Vanguard index fund. It's an ETF. So basically, it's the S&P 500. It's the top 500 companies in the Dow Jones. Okay, so that's what that is. So here's what we created this thing. All right, so here's what we did. So now let's get over to it. There is a section here where I can say, let's see if I can get to holdings. I think this was the section. Okay, so here's when we bought these. So here's what's happening right now. Let me get my head out of the way so you can understand what's going on. We created this, and I'll tell you the days that we added it, so you're not saying, oh, okay, Dan, you make these up after the fact. Okay, so here's this fictitious portfolio we made. So here's what they are. They're a basket of funds that basically hold a position in a specific segment of the economy. So, for example, XLF. XLF is a basket of stocks that is here. I'll show you exactly what it is, so you can understand this as we go. I'm sorry, I don't have a mouse this evening, and having a little bit of a tough time. So we bought XLF on 9/9 of 2024. We bought one share at $44.95. And then let's go to it. Right now, it is at $49.89. Okay, let me see if I can dig into it and tell you exactly what it is. So it is an ETF of the financial sector. So sorry about my gobbling just a little bit ago. I was looking at XLF and ETFs, and there was a couple other abbreviations, and I kind of went baffled. So here's what this thing does. If you like financial stocks, what happens is normally a lot of investors will move to financial stocks when interest rates are coming down. You're like, okay, I'd like to invest in maybe some banks, for example, or Visa or credit cards, because a lot of consumers are carrying a lot of credit card debt. How can I do that the most efficient way? Because you don't really want, as a new investor, I would strongly suggest not to buy one single share of like a bank. But here's what the cool thing is. You buy one share of this. Okay, it's about $50 a share. What are you buying? What's included in that if you buy one share of that? All this stuff. You're actually getting Berkshire Hathaway. This is it's 12% of its assets. If you ever heard of Warren Buffett, he controls this. That's where my kids usually invest in, and I hold a good position in that because it's just it's a huge corporation. You're getting JP Morgan Chase, Visa, MasterCard, Bank of America, Wells Fargo, Goldman Sachs, American Express, Morgan Stanley, and the list goes on. By buying one share of that, you're getting shares of all this. So that helps you basically limit your risk. It'll limit your returns some, but it'll also limit your risk that you're not getting, if one of those banks got clobbered or went out of business, you're not losing all your money. So here's what we did. We went through this. We created these. Here's where we are up. This is how much the portfolio would be up today, or each one of these positions. That's daily on a percentage gain. Here's on a dollar gain. Here's my gain percentage wise since we created this thing. And here's the gain just today. So you can see, like, for example, this is Bitcoin times 2. So let's see if we can figure out when we bought this. We bought it on 9/9, so I didn't make this up. And we paid $24.01 per share. And right now it is at $49.98 a share. So we doubled our money. We're up 107% since 9/9 of 2024. And the list goes right through here. So in these, you can see how the returns. And these are only, like, for example, if you look at this foodie, let's see when we bought this. We bought this 10/9, a month ago. And our return so far is 0.5%. So not bad for, just a short, very, very short period of time. So that's what we talk about on Stock Talk Tuesday. But my name is Dan Frio. What do I do for a living? Well, I actually do mortgages for a living. So if you're out there and you need some help, maybe buying that first house, maybe buying that first investment property, you have a multiple investment properties, and you're trying to think, what's a good way to manage these things and get loans on them? How about a DSCR program for you, or a reverse mortgage? We have all kind of solutions for you. So if you're out there looking for assistance with real estate, love to help you. But if you're out there trying to buy that first house, the one thing I'd suggest you do is hit the grant finder button right up there. It'll find you some grants available throughout the whole country. There's one special one out there in the Chicagoland area where we're located. But otherwise, if you want to get the ball rolling, hit the apply now button right up over there. My apologies. Or if you want to find our work number, so if you just want to give us a call, that's what I would suggest. Then you don't have to wait for somebody to respond to your emails or your apply now link. Give us a call. It's 844-775-5626. Thanks so much for watching, guys. God bless. Have a fantastic evening. And thank you out there to your veterans.